My name is Melissa Armo, and I own a company called The Stock Swoosh, and I'm looking at gaps every single day to get in and get out and basically chunk out the profit. So you can do gaps or trade gaps for swing trades or options trades, but I think the most beneficial thing is when you're in and out very quickly in a few minutes. So I focus on one time of the day, which is actually the morning between 9:30 and 10 a.m. Eastern time. So if you have any questions, you can email me at melissa@thestockswoosh.com or feel free to call me at 929-3200-GAP. So my job as a trading educator, besides trading myself, is also to teach people what to do because I started trading about 10 years ago, and I went through a lot of pitfalls when I started out in 2008. And I wish that I had a mentor at that time that would really walk me through the daily trades. And my trading room is only open in the morning. It's just very quickly in the morning, we're open and we're in and out of the trades. I found way back when I started that I gave money back when I traded in the afternoon. And that was very frustrating for me. So I think it's important for people to stop when they're up, and especially if you're up your goal for the day, whatever that happens to be, whether it's $500, $1,000, whatever your goal is for the day. So here's some comments from the room. But in order to join my trading room, you do have to learn my method. And so we're going to talk a little bit about gaps today. And there was a big gap today, this morning, actually, what happened last night, which was in Facebook. I'm sure a lot of you saw that. Facebook made brand new all-time highs yesterday before 4 over 218. And then after hours last night, it gapped down something horrific and opened this morning in the 170s. But that stock is a good example of a gap, and we will look at that chart today. But a lot of people decide to trade for different reasons. So I was looking to change careers. That may not be something you want to do. You might just want to trade on the side for fun, for part-time income. Either way, even if you do this as what you would call, quote unquote, a full-time job and not have any other jobs, this is not 40 hours a week, okay? You're just focusing on making money in one trade a day or 2 trades a day, and that's it. It's really just about the quality. So when you're trading, you're looking for quality, not quantity, okay? One of the most important things that I talk about as well, and Facebook is a great example of this today because a lot of people went long Facebook, but we shorted Facebook, is conviction, okay? When you go into the market, the only way that you're going to make money is if you take risk. So how do you choose what stocks to trade in order to take the risk? What is good enough? Again, getting back to this quality, and I call it conviction, okay? So when you have conviction in a trading strategy, you can produce positive results. When you do not have conviction, however, in a trading strategy, do not expect positive results. And I think one of the very important things is to have a trading strategy at all. A lot of people trade the market and they get ideas off of television, off of the internet, through emails, and they don't really have any set strategy, don't understand why so-and-so called the trade, and they don't have any conviction in it. It's so much easier, okay, if you understand why something is setting up. And again, I'm going to go back to Facebook because it's a great example because a lot of people wanted to go long that today. But it was a good gap down. It was a short, okay? So it's the understanding, it's the knowledge, it's the information that tells you that selling is going to come in or buying whether you go long or short, okay? So in the casebook, though, again, about what I was saying, though, Facebook was a short. So I focus on a set time of the day. Ideally, I want the stock to set up between 9:30 and 10 a.m. Eastern time. So what happens in that morning period? Well, the market's still trying to usually figure itself out. I'm not looking to get the market necessarily with me in my trades, all right? So the idea of getting in and getting out very quickly in a set time means you have set parameters for it. You have risk parameters, you have time parameters, and I do prefer to short, okay? So I even have parameters where I'm looking to go one directional bias. Now, that's not to say I never go long, okay, but I definitely prefer to short. And one of the reasons is because that stocks sell off much quicker and much faster than they rally. It's just because panic. Okay, the idea is that panic comes in, and when people are long, when they're long a stock, and again, I'm going to go back to Facebook because it's a great example. People are long a stock, then it sells off, and then all of a sudden, guess what? They were up and now they're down. In fact, let me just see if I can pull my chart up here. Can you guys see that? Can you guys see that, Facebook? Because I'll show you what I just meant there, and then before I go back to the PowerPoint. Does everybody see the slide? Can you see it? Okay. So I'm looking to focus, as I was saying, on I prefer to short. Why? Because of panic. And this is a good example because say you were long Facebook yesterday. Say you were, okay, which you might have been. And why might you have been? Because look at the chart. I mean, Facebook has been in an uptrend, a strong, strong rally all of 2017, 2016, 2018. I mean, it had this one little hiccup here that recovered very quickly from, actually. Dropped off fast, but then recovered very quickly. So if you were long this, that was the way to be. You would be up, okay? And then yesterday, like I said, the stock gapped up. This is a gap too. Remember, I talked about gaps. I prefer to short, but this was a gap up yesterday. Actually went up to 218.62. So the stock closed at 217.50. And if you had bought the stock yesterday, guess what? You got up this morning. If you woke up out of the middle of the morning this morning and saw Facebook, you'd be in a panic mode. You'd be in an absolute disaster, panicky. So you see here the low today, 174.78, and the open was what? 174.89. So this is an example of a gap. Stock closed here, gap down. That's a gap, and this is what I look for every day. Now, what do I do? What do I do in the room? What do I teach in the class? How to determine what to do with this. Buy it or sell it, okay, or short it, all right? So that's all that I'm looking for, and that's what I look for every day. All right, I'll go back to the... So the set time of the day is very important. Whether you get out by 10 is totally up to you, but you want to see the setup by 10 o'clock. Here was another good one. This was a couple of days ago. It was yesterday, actually. The 25th, General Motors, okay? General Motors was a short, okay? And it gapped down. So the stock, you can't see it because the clock's behind here, but the stock closed the night before over around 39.50 and it opened in the morning here around 37.50. Stock gap down $2. Now, it could have rallied. It started to rally initially here on the open. This is 9:30, 9:31. We got in this trade here, boom, right away, right at 9:31, you get the drop. So when you're looking to short, okay, you're shorting this. So you see here, time of the day is what? 9:30, here's the open. And you see down here, I know this is kind of small, this is the volume, and here it says the time. This is a 1 minute chart, but you can see 10 o'clock. So you would get in, out, in, out, in, out, in, out. You could have held it down a little bit longer, but you're in, okay, between 9:30 and 10. And this is a short, so the price drops. So when you short stocks, if you're not familiar, when you're getting in, you want the price to drop. And that's a very sophisticated way to trade because many traders, even day traders, even active day traders have been trading for years, do not understand shorts. It's something I'm very good at. But this is one of the reasons why you can make a lot of money if you learn my system, because shorts move so quick. And the faster you're in and out of a trade, the less you're at risk, the less you're at the mercy of the market, the less you're at the mercy of economic news. If Trump tweets something, whatever, you don't have to worry about other things happening if you're in a trade for hours and hours and hours and hours and hours, or if you're trading all day long, which I really don't tell people to do, okay? Anyways, here was the GM. So just a quick trade, that's it. And you say, well, this, it's 40-some cents. Yeah, but that's all that you need. Boom, drop. I'll go back and show you the chart. Entry, 37.36. Share size, 6,000. Now, you do not have to take 6,000 shares, but this is an advance size. You certainly would get filled this. There's plenty of volume in this. We're looking to trade stocks that you know. Stocks, everybody knows General Motors. Everybody knows Facebook. Okay, we're not, no penny stocks, no cheap crap. This is all stuff that you would know that's being traded, that you've heard of before, you know the company, or you could look it up. And this is just the quick move. So it kept going, all right? I think the low was 36.50 something. It might have even been 36.40. Anyways, this is a fast exit in a couple minutes, 36.92, boom. You could have made 2,640 bucks. I'm gonna go back and show you that one. Again, this was the 25th. And this is the call I made live in the room. So if you take the trades with me in the room, you're just taking the trade when I call it and you're getting out when I do, or you could have held it. Actually, it looks like this went down to 36.30 something. So anyways, we did it here and got out. Here, got out. And again, that's just because I really, really, really like to get out quick, all right? But these things down here, they kept going. Now somebody asked a question here. Margin requirement for shorting starts, you have to ask your broker. I'm not a broker, so it depends where you trade. There are two different types of accounts to day trade. You can have a retail account or you can have a proprietary day trading account. So you will have different requirements and different margin requirements as well, and different deposit requirements depending on your broker. I am not a broker. You would learn my system. I'm an educational firm, and like I said, I call the trades in the room. You have to contact your broker and find out how much money do you have to deposit to day trade, how much money, how much margin do you get, or buying power. Some places are 10 to 1, some places are 4 to 1, okay? But every place out there, you know, lots and lots of places offer day trading and shorts. So you just have to go to a place that you're happy with the platform. You can actively get in and out. You want to be able to do it and be comfortable with the platform yourself. I use hotkeys. You can use a mouse if you want. I say practice when you first open up an account someplace with a demo or just 100 shares so you get used to it. And like I said, I think hotkeys are very important. But you can open up a day trading account in a day or two. It's a very short process. There's so many places out there though. I mean, you can go wherever you want. And I just tell people, if you have an account set up right now, just use the one you have. And some people have accounts set up, but they do not have them set up to day trade. They don't have them set up. They may have them set up for options or something, so you have to call, okay? So if you've got one set up, call. If you don't, you can email me or refer you to someone, or you just pretty much call any place you want. There's a million out there. You got to check the commission. Some charge platform fees. You got to check around. And if you take a lot of share quantity, you will tend to get a break in the commissions. Just FYI. All right, if you be shorting 5,000-6,000 shares every day, you're gonna get cheaper commissions than if you would only taking a couple hundred shares. Just so you know, because the broker makes money when you take the size. The more trades you take, the more money the broker makes. Okay. Anyways, your time is very valuable, so the idea of getting out and getting in and getting out quick is important. Okay, at least for me. For those of you that never heard of me before, I appear on Fox News and Fox Business Network and some other channels. I'm on today at 4 and 5. Actually, you can watch me. So the idea of trading in the morning and getting done means I can do webinars like this. I can do television in the afternoon or at night. You know, I can do other things with my life. Some people go to a job. Some people have real estate. Some people do all kinds of things. But, you know, I personally do not like to sit at a computer for 6.5 hours staring at a chart. Again, like I said, the longer you trade, it seems the more you're at risk. So I think time is very important, and the more money you can make in the shortest amount of time, that's appealing to me. Okay, that was always appealing to me when I started to trade. The GM trade, it was like less than 5 minutes. Here, I'll go back. That you could have held it longer. I did not, but I'm saying you could have. But anyways, literally, we took it here at 9:31, and I called to get out. It was less than 5 minutes. It was like, I don't know, 3 minutes and change. It was like 3 minutes or something. Okay. But you could have held it. What you could have done, and I didn't do this, but you could have taken it, got out half, put the stop at break even, and tried to write it down. You could have taken it, not got out of anything, put the stop at break even and try to write it down. But if it would have retraced, then you would have been up your goal for the day, and then you would have got out with nothing. So you know what I mean? So I like the morning. That's just my thing. Anyways, let's look here at eBay. eBay was another one that I got out quick, but it kept going. Okay. So eBay gapped down. This was last week, the 19th. Again, it was an earnings play. It's earnings season, July, August, very busy time to day trade gaps. Not for the overall market, except for right now we're having a lot of volatility with tariffs and things, but in the news cycle. But overall, usually the summer months are slow, but not for gap trading, because you have a lot of moves on earnings. Again, some moves are up, some are down, but specifically here with eBay, this was another short, and as I told you, I love to short. Now, eBay, you could have shorted it or you could have done a put. So I'm going to go over both here because you could buy the put as an option trade. But anyways, here was a day trade. Here's 9:30, here's 9:31, boom, you're in. You get the drop. You could get out here or you could hold it a little bit more. All right, it did keep going. Dream target in this was like 33 something. This actually ended up going here a couple of days down. I want to show you. This was the day we did it. It did continue down to 34. Second day down, third. This ended up going then the third day down. I didn't look at this today, but this was Monday. And you see how you could have done this as a swing trade, and you could have done this as a put, and you could have done it as a day trade, and actually could have shorted it every day. But we only did it here for the day trade. But I just want to show you, again, the power of the selling. Somebody asked me, this is not for small account holders and you have 25,000. Yeah. Here, I'll just really quickly, again, I'm not a broker. You need $25,000 in a retail account to actively day trade. If you want to open up a proprietary day trading account, you need $2,500 minimum. So there's a big difference between $25,000 and $2,500. So you can trade my system with a small account, but you cannot go to a retailer place like E-Trade. You would have to go to a place called a proprietary day trading account. If you don't know what that is, look it up. There's a million proprietary day trading firms out there, and most day traders do trade at prop firms. If you don't know what that means, I can talk about that more at the end if we have time. I'm not sure if we have time. But I'd say 50% of the people in the trading room with me have retail accounts where they have 25,000 or more, and 50% have less than 10,000 in an account. But $2,500 is a minimum at the prop place that I have referred people to. But you can go to any prop place. Some allow you to trade with only 500, but I don't suggest going to a place like that. I think 2,500 really is a good starting point for a prop account. So you do not have to go to a retail place. You go to a prop place. If you don't know what that is, look it up. Just Google proprietary day trading, okay? And again, if you have questions about that, we can talk about that more at the end. So you have two choices. If you have a lot of money, put it in a retail account, but the downside is you're only going to get 4 to 1. If you have a little bit of money, you go to prop place. The benefit is you're going to get 10 to 1 leverage. So there's benefits of going to prop places. In other words, if you even have 25 grand or more, you could still go to a prop firm because what? You're going to get 10 to 1. So if you have 25 grand, you could go to a prop firm and get $250,000 in buying power, which is a heck of a lot better than only getting 100,000, because that's all you're going to get like at an Ameritrade or E-Trade place. You understand? So there's a lot of benefits. The only benefit really of going to a retail place, because they give less margin and they require more deposit, is that you could take your money out immediately. That's the only benefit of doing it. And sometimes they don't charge platform fees, whereas a lot of prop places are going to charge you a platform fee. It could be $200 a month, could be $250, something like that. I didn't really want to talk about accounts, but there's a brief synopsis. Whoever asked me about the broker, just email me at melissa@thestockswoosh.com about that. Again, I'm not a broker, but there's plenty of options out there in order to day trade without a huge account. But I would be very careful about vetting the places you go to. Don't go to some place that says you can open up an account with $500. I think $2,500 is a starting point, and that's a good minimum. And you're going to get 10 to 1 margin. Back here, where are we on the eBay? Okay, so eBay. Entry 3521, share size again 6,000. And someone had asked about a big account. You don't have to take 6,000 shares. You could take 100 shares. You could take 200 shares. You could take 600 shares. You don't have to take an advanced risk. You see here, I have this at the top, advanced. I've been doing this for 10 years. If you take my class and learn right out of the gate the first week, I certainly don't think that you would take 6,000 shares of eBay or anything else, all right? But this was a great trade. A fantastic trade. It was over $5,000. Why? Because the share quantity was 6,000, stock dropped like a brick, and it was almost $1. And you will have moves like this happen all the time. This move happened in 30 minutes, okay? This was a great gap. So you shorted it here, get the drop. Shorted it here, get the drop. That's it. Now, how do you know to do this? Because I'm rating the gaps with my system in the morning beforehand. Okay, way before the open. Sometimes I do it at night, sometimes I do it in the morning. Now, what's a beginner look like? $35.21 is an entry for a beginner. Share quantity 600, still $510. And this is more than affordable. Every person that trades should be able to take a 600 shares of this. And again, your profit was what? $510. And you do not need a big account to do this. If you want to take 6,000 shares and make $5,000 in a trade, yeah, you're going to have a decent size account for that. But you take what you can afford. You risk what you can afford. You open up an account with what you can afford and do not risk more than you can afford, okay? What you want to do is build your account up. If you open up an account with $2,500 at a prop place, build it up to 5. Then when it gets to 5, build it up to 10. Again, chunking it out. Chunk it, chunk it, chunk it. That's the best possible way that I can describe the way that you have to look at day trading. Now, going back here, this was the put. So you could have done a put in eBay. So you would have bought the put, and this was just, you know, last week, I guess. It was from the Thursday into the Monday. Cost of the put was what? Option cost is different. There's no margin required for this. So we're talking about margin. There's no margin required. It has nothing to do with the cost of the stock. It's the cost of the contract. Option entry, 20 cents. Share size, 80 contracts. Risk, $1,600. Sell price, 60 cents. You could have made what? $3,200. Again, you don't have to take this much size. However, it was a great trade. And actually, $1,600 isn't crazy to be able to make $3,200. And it took you 3 days to do it. Again, you got the drop, you got the move, you got the selling action that happened in eBay. So in this case, you do not need margin. You do not need an active day trading account. You take the position on Thursday, you got out Monday. What you risked is all that you possibly could have lost. And it was only the cost of it, which was in this case, $1,600. All right. Actually, I haven't looked at eBay today. I don't know what it's doing, but that chart definitely looks lower. Any questions so far? You know, when you're trading stocks, when you are trading, okay, when you're trading stocks, day trading, not options. Options is just the cost, but when you're day trading, you do have to look at margin. And I've talked to so many people. In fact, I talked to 3 people last night that called me because I set out a block of time to talk to new clients. People tend to gravitate towards Forex or futures trading because they get such high leverage. It can open up small accounts so they don't have to worry about buying power, things like that, and trading the U.S. stock market. I'm telling you, you don't fare any better going the cheap route. You just don't. You can make real money trading stocks. Risk what you can afford. Don't shy away from trading stocks because you think it's too expensive to do things that have a cost, meaning the cost of the stock. You trade on margin, go to a prop place if you have a smaller amount of money, meaning open up an account with $2,500 and build it. You will be a lot better off in the long run. There's no cheap shortcut to success. There's absolutely none. Not in television, not in trading, not in anything. Okay, doing this for 10 years myself, and it took me 3 years to create my system. If you get out of the mindset and start being realistic that you can actually do this and do well and focus on doing well and focus on making what money you can, whether it's $100 a day or $500 a day or whatever, with the money you have, you will fare a lot better in the long run and you'll have longevity. You'll have longevity. A lot of people blow up and then emotionally and financially, they cannot hack it. And then they're always looking for the quick buck. I'm telling you, it doesn't exist. It's a farce. It's a fantasy. Think with common sense. You need money to trade. You do not need $25,000, but you need money for my class if you want to take it, and you need money to open up at least a prop account, which is $2,500. You're not going to get rich opening up an account with $500, and you're not going to make $100,000 in 3 months or something stupid like some places say out there. It is impossible. It's crazy. Think with your brain. I'm telling you, trading works. You have to do stuff that makes sense, okay? And specifically when I'm looking to short selling action, that makes a lot of sense. The fact that I like to be in and out quickly is just a personal preference, but I like to be in and out quickly to do other stuff with my life, and I also don't want to be at risk long unless I'm in an option. Why? Because if I'm in an option, I have a fixed risk. So even if the market goes haywire between today and tomorrow overnight, I would only ever lose the one amount, whatever I would risk in the trade, okay? You must protect yourself. You protect yourself with stops. And when I take day trades, I use a hard stop. It's a limit order stop, okay? Have another question here. The option trade had a better risk to reward in the sense, yeah, I guess that one did. Yeah, you had to hold it for 3 days. Yes. In the case of eBay, it was a good risk to reward, but you had to hold it for 3 days. So that wasn't quick. All right. So again, you could have done both. You could have done one, you could have done both. All right. Same thing with Facebook. Any other questions? Anyways, as I was saying, the nice thing is you can sit at your desk in the morning and be done. You don't have to be there all day. Here was Facebook this morning. Okay, you can see the gap. I just showed you that chart already. Anyways, where do you start? You have a focus. So my focus, I called my system golden gaps. I specialize in gaps. I'm looking at what they're doing, and I'm only focusing on one a day, maybe two. I'd like to do one trade a day, one ticker symbol. One of the great reasons to trade gaps is they have momentum, they move, you have nice profits in them. And this was General Motors. You can see the drop it had. Okay, again, this was 2 days ago. Also, I like to trade gaps because I'm done fast, do other things with your day, and is a good risk reward payout. Usually I'm looking for it to flip over 1 to 1. Okay, so you risk 100, make 100, risk 1,000, make 1,000. That's what I'm looking for whenever I'm taking a trade. I'm trying to see, can I make at least as much as I risked? It doesn't matter if it's an option or a day trade. I want to flip it over. Sometimes though, like the eBay, they end up being way more. Okay, sometimes you can have a 200% return on investment in an option. Sometimes you can have a 4 to 1 payout in a day trade. You just don't know. Okay, you don't know until it sets up, because I don't know exactly where I'm putting the stop until the trade sets up. So I teach a method and system. I rate the gap. I go through a checklist, and that tells me I'm going to watch it. And I'm telling you, it's invaluable to have the focus. It makes it so much less stressful to trade. And then if I don't get anything, I don't do anything. But then you don't lose. Okay, so when you're looking to do stuff, to make decisions on that in the moment is so stressful. And so that's why preparation is key. All right. So I get up in the morning, I look for gaps, I rate them, and I'm looking for gaps that are created with institutional money. All right, gaps are formed by one thing and one thing only, institutional money in the market. The large institutional money, I'm looking to have it on my side with me, either buying the stock or shorting the stock. Gaps are an event, and they create a sense of urgency in the stock. Okay, so therefore it's forcing participants of the stock to do something. Okay, and it's very powerful. So there are so many stocks that gap every day. How do I know to narrow it down to eBay or General Motors? Even now in earnings season, there's probably 100 things each morning just in the direction down that are gapping down. How do I know to short these things that I've discussed today, these trades that we did? Because I use the rating system that I developed. It's a 26-point professional bearish gap rating system. The purpose of the system is to help you evaluate which gap to trade each morning using a checklist. That's what I use. It's like you're going, and if you were a pilot and you're going to fly the plane, you would go through the checklist and you check off every box that you need before you take off. And that's how I look at my trading day. And if you want to be a professional and you want to risk serious money in the market, then you need to have a system. If you want to be consistent, if you want to do this at all, otherwise you're just trading on the fly. And like I said, that's really not a good idea to do. Also, having the checklist helps you to be more efficient and accountable. And it's less stress then. So you just watch the stock you're watching. If it sets up, you do it. If it doesn't, you don't. Now, when do gaps happen? This was last night. I want to show you. The stock dropped here last night, fell hard, okay? And then here's this morning. So this is the gap. The gap was happening last night in Facebook, and then here's this morning. So the gaps happen at night or in the morning. They could happen both, or they can happen one or the other. And so you're looking for the after hours. We're not trading after hours, but you're watching it there. And that's the whole philosophy behind it, is to analyze a big time frame and determine what to do. But then I'm taking the trade on the live day in a 1-minute chart. And that's the brilliance of my system. Okay. So I'm looking for big funds, hedge funds, banks, and I'm seeing what are they doing? Are they buying? Are they selling? And then I'm taking my trade on the 1 minute, which is a very fast chart. And those were those charts that you saw, but that allows for the accuracy. And it also allows for the good risk to reward, which I'm doing. So if you come and you learn my system, you're going to learn stocks that have big moves in the day, early confirmation of the bias, precise entries with follow through and a good risk to reward, and a high probability of directional bias for the entire day. Now, that doesn't mean I'm staying in it all day, but that's the whole idea. But it is the checklist it's the reason I'm successful, okay? And anytime you want to do anything in the market, you need to have a plan of action. So for me, that's it. I decide the risk. Everybody risks a different amount based on the size of their account. But as far as the pick, when you're in the room with me, you're going by the pick that I go by, and you do the call that I give. For example, if I say 10 by 40, then you're shorting it at 10, you're putting the stop at 40. And I call the trades live in the room, live. Okay, me every day live in the room, and I tell you where to get out if you want to get out with me. And I also give the gap ratings in the room, and then I give the targets too. And that is invaluable because a lot of people that teach classes do not run a live trading room that give lifetime calls like I do. And I'm very good at what I do, but I'm good at reading stuff fast. And again, I just like to trade fast. It's just my personality. Any questions so far here? Okay. Anyways, if you want to start out with a small account, you can. If you start out with $2,500, guess what? You're not going to risk $1,600 in a trade. You're going to risk 50 bucks, 100 bucks. All right. You're going to take small size. You're going to build it up. So you can start out with an advanced risk of 6,000 shares if you have the money and you feel comfortable after the class, or start small and build it up. But the only difference between making $50 a day or $5,000 a day or $500 a day and 5,000 is your size. So you have to get used to it. It's like getting up every day, I do the same thing. It's like riding a bike, okay? Once you do it over and over and over and over it again, it's amazing because you will really get a feel for things, and it's like second nature, okay? Like for me, it's like, how do I know that Facebook's going to fall? Because I've been doing this for 10 years, you know, and I rate the gap, and I know it's going to work. You know, once you get into a habit and a system, I'm telling you, that's how you make money. You got to get good at something. People jump all around all the time because they want that one thing that's going to magically make them $1 million. No, focus on something and get really good at it. And that's what I did. And that's one of the reasons why I'm doing what I'm doing. I have a business, I'm on TV and making money. You have to focus and learn what quality is all about, and then you add the size, and then you're hammering at it, and you can really go at it, okay? And again, I talked about the conviction. But for the brain, you know, it's in live time, so when you're prepped, so much easier, and honestly, it's less stressful because you know by 10 o'clock if the stock isn't set up, then you're not doing anything at all. All right, and you acclimate yourself to that. So I use the checklist that helps me get everything figured out, and you will learn this in the course. You will also learn the entries and the exits and the targets. The course teaches you how to play the stock on the day, and it's advanced technical analysis. It's technical analysis on a daily chart and then the 1-minute chart, but we're looking to get in and out in 30 minutes a day. I put stops. I teach the targets in the class too, but you're going to learn how to determine where gaps go. And that's something that a lot of people don't understand. Gaps do not fill themselves. You do not trade like that. They don't work. I know a lot of places teach gaps incorrectly, and then people tend to lose money doing them. I'm telling you, I'm looking at them in a very unique way, but it's using 26 points, and it sounds like a lot, but actually that's how I get the accuracy. Somebody had a question. Could you resume your system? Could you what your system? I don't understand what you just said. I didn't understand that question. Could I resume my system? Hi, Melissa. Very interesting to a former accountant. Any clients based in the UK? Also, yes, I do have people all over the world. I do teach bullish gaps too. Okay, we do them sometimes. Sometimes we do go long. That class is not this weekend. This weekend's class is the bearish class. I usually do the bullish class about once a year. Somebody said something about my system. I didn't understand the question there. Anyways, momentum trading is why it's fun to trade the U.S. market, and why so many people from other countries want to trade the U.S. market, because it moves, okay? Because stocks do move so quick and so fast in the U.S. market, and you get a lot of volume, you get a lot of participants. So if you want to learn how to make money quickly every day, I can teach you. Again, my class is this weekend. It's called the Golden Gap course. You will learn how to make money in the market. It's a complete system. You don't need anything else, and I don't hold anything back in the course. The class is online. It's a full 2-day course on how to strategically find, pick, and play stocks that are professional bearish gaps. The class is online. You can be anywhere in the world and take it. It's July 28th and 29th from 9 to 5. Cost of the class is $54.99. The class is online. Deadline to sign up is tomorrow. I know this is today. It's just the way it was, and I had this class already scheduled and people already registered, signed up. But I'm doing a big Shark Week class special. I love Shark Week. I've been watching it every night. I don't know if anybody else loves it, but I've been loving them. And I'm offering this. If you sign up for the class by tomorrow, you'll receive the trading room free for a year, the options letter free for a year. This is a huge deal. Normally, you have to pay for these other subscription services. So you would get all my trade calls for an entire year. The class is this weekend, July 28th and 29th. If you can't do the class this weekend and you want to sign up, you can do the class in August, but you have to sign up and register to get this deal, this special, by tomorrow, by Friday midnight, okay? Let me just see if there's any other questions. Someone was asking about the 26-point list. That's what you learn in the class. That's what costs money. That's what's worth the information. You're paying me to get what 3 years it costs me to figure out the 26 points. So you would learn that in the class, Ram. If you want to sign up, you can email me at melissa@thestockswoosh.com and sign up. You could do the class this weekend. Then you would get the points. Then you would be in the room for the year and get the options letter free. That's what the information is, okay? And I'm telling you, so many people trade the market. They don't know what they're doing. Some people take classes and they don't learn anything and they never want to take a class again. That's silly, okay? If you don't know how to trade and you're not making money, then you need to learn from someone else that does. Or your other option is do what I did. Figure out your own system yourself, but you better have a lot of money behind you and it's going to take you a long time. And you also better have, you know, a very, very strong will, okay? I am a very strong person, but it was tough for me for 3 years, okay? I did it, okay? But I don't think many people could do what I did. So you have to learn from someone else unless you want to create your own system. But that is a long, hard, and very expensive road. I'm just telling you the truth because I know because I did it, all right? If I could have learned something like what I have now and teach people for $5,500, I would have been thrilled, okay? But it's not out there because what I do is very, very, very unique. And many people don't trade gaps. Many people that do think gap fills work, and I'm telling you they don't. So think about it. I appreciate everyone having me. Let me just see if there's any other questions. You sign up for the class. Someone asked, if you sign up for the class, the Golden Gap class is this weekend, 9 to 5, Saturday and Sunday. It's $5,499. If you sign up, you get 1 year free in the trading room, the class, and 1 year free of the option letter. Does everyone understand? Yes, you can go, actually email me, you can go to YouTube. You can go to YouTube. I had the trade tracking for 2016, 17, and 18 on YouTube. They're on YouTube. You got to find the videos. Trade tracking is on YouTube. My win ratio for 2018 for the room is at 71%. That means if every 10 trades we take, 7 are winners and 3 you can expect to be losers. You can go to my YouTube, the Stock Swoosh, and look up the trade tracking or email me and I'll send you the video clip if you want to find the video. I don't have it in here, but it is on YouTube. Okay? The trade tracking results for the last few years. Or just email me and I'll send you the links.